Welcome to today's deep dive into everything you need to know about trading psychology and this little phenomenon that occurs inside our brain after we take a big loss, which makes us especially susceptible to making additional mistakes and losing more. In today's episode, I'm going to share with you some tips and tricks you can implement in your own trading starting today to, number one, help you prevent falling into the trap of a spiraling drawdown, and number two, to put you on a recovery plan to help you make back some of those losses if it's already happened to you. My name is Ross Cameron. I'm a full-time trader and I funded my first account in 2001. In January of 2013, I created this YouTube channel to send the ladder back down to aspiring beginner traders, perhaps like yourself, who want to learn a little bit more about the strategies that I trade every single day. Now, if you are a subscriber on the channel, and I hope you are, you'll know that I upload my recaps every day, whether it's a green day or a red day. But yesterday was not an ordinary day. Yesterday, I took the biggest single trade loss of the entire year, and I finished the day max loss in the red. And so the rules of the game changed coming into today. In fact, I had to begin phase one of trader rehab with the BLRP. The BLRP, that's the big loss recovery plan. And we're going to jump onto the screen share here into the slide deck, and I'm going to start walking you through how to reset your brain after a big loss. This is one of the biggest challenges with trading. We often say that trading is 50% skill and 50% psychological. It's your mental game up here. And in this episode, I'm going to share with you some tips and tricks to help you improve that mental game. So we're going to go full screen on this slide deck. And we're going to start by talking about what happens to your brain after you take a big loss. So we're going to think back to what happened to me yesterday. I took a trade where in one trade, it was less than 5 minutes, I was down over $25,000. Now that's a pretty big loss, certainly a lot to lose in 5 minutes, although I've suffered worse. But the immediate response, the immediate reaction is an emotional reaction, right? That's like getting kicked right in the, or punched in the face, let's say that. Punched in the face, it's an emotional reaction. I feel anger, I feel frustration. Now, some people might feel disappointment and sadness, and those are feelings that I have, I suppose, a little bit as well. But the first feeling that I have is anger, frustration, and disappointment in myself, I suppose. Like, I'm such an idiot. I can't believe I did that. But here's the problem. That's such a big emotional reaction that it creates these terrible feelings. So now I'm sitting here burdened by all of these bad feelings. And when you have a lot of bad feelings, what do? You do almost anything to make them go away. And in the context of trading, how would I make all those bad feelings of disappointment and guilt go away? Well, the fastest way is if I could recover that loss almost immediately. And that is the biggest trap in the market that leads people into these downward spirals. So what I end up doing, and this is very common for beginner traders, what beginner traders will end up doing before you've sort of learned about this phenomenon is you engage in emotion-seeking actions. What I mean by that is you take steps to eliminate the bad feelings, which often results in desperate attempts to find winning trades to offset your losses so you no longer have to feel bad about yourself, right? So if you lose 25 grand, but you make it back 5 minutes later, well, all's well that ends well. You no longer feel like an idiot because you're back to break even. And so what most traders are going to do is they're going to start thinking, well, all right, I lost $25,000. So all I need to do is buy 25,000 shares of a stock and make $1 a share. Or maybe I could buy 50,000 shares of a stock and 50 cents a share is all I need. And I'm telling you, when you are in that mindset, the rules of your strategy are out the window. You are now trading based on impulse and emotion. It's like the knee-jerk reaction that, you get knocked down and immediately you're jumping back up looking for anything that'll move. So this sets off a downward spiral. So you have the emotional reaction, which, look, I'm going to feel that too. I take a big loss, I'm going to feel anger, frustration, disappointment. But the difference between a beginner trader and a more seasoned trader is a seasoned trader is going to recognize that that type of loss can create emotional compromise where we're no longer able to think clearly. And thus, we're able to intervene before taking the emotion-seeking actions. Or we at least recognize that we're very susceptible to falling into that type of behavior and that type of pattern, and so we're on alert for it. So as a beginner, emotional reaction, that's the catalyst. Well, the catalyst is the loss. And then you have the reaction. So then you've got the emotional reaction, and then that leads into the steps to alleviate the feeling, the pain, which is trading. And what that means is you're trading low quality. So you start trading low quality setups. And what happens when you trade low quality setups? Your profit loss ratio goes down. Your accuracy goes down. And so naturally you suffer more loss. And then the emotions get bigger and do. Now you see where we're going. This is where it becomes really dangerous. In a matter of hours, I personally have had massive spirals, and I've seen it happen to other traders. Now, the downward spiral for many beginner traders starts with a poor track record. So if you don't already have a track record of self-confidence, then you're so much more likely to fall into these traps of just trading pure emotion and getting frustrated. So you've got a poor track record, that feeds into poor self-confidence, and then you have higher pressure because all of a sudden you're feeling like, I've put all this time and money into trading, I'm not finding success, I need to turn this around. And so now with more pressure, you start taking more trades, but without the track record to support it. And all of a sudden you're building the losses. You're fueling a negative track record, and the downward spiral is getting bigger and bigger and bigger. So let me share with you the lessons that I learned from my biggest year-to-date drawdown, which was actually not the loss that I just took yesterday, but it is actually more interesting. And what I learned from that loss, and of course I've learned from all these losses I've taken over the years, are some of the lessons I'm going to share with you today that I am implementing right now after yesterday's big loss to help avoid this becoming an even bigger drawdown than the one I had earlier in the year. So you'll be able to implement all of these tips and tricks in your trading today. So this was my biggest drawdown of the year. It was a $28,470.81 drawdown, and it happened over the span of 2 days. Now, I'll put it in context. I'm at $1.4 million on the year right now. But when I took that loss, I was at about $200,000 on the year, which meant I gave back a solid 10, 12% of my profit on the entire year in 2 days. That hurts. That doesn't feel good. And unfortunately, I made the loss a lot worse than it needed to be. This right here is not a good example of discipline. This is an example of what I don't want you to do. So what happened on day one? On day one, I went into the red on my first trade. All right, so I got knocked down and I came back swinging hard and I got myself back into the green. And you know what? Any day where you go from red to green, you got to be grateful because you've already had a warning flag, a caution flag out. You went red and you fortunately made your way back to green. Don't overstay your welcome. But I did. I overstayed my welcome, and it looks like in one trade I went back to break even, and in another trade I went down to red. And then I kept trading. Now, this should have been the time where I would have said, I'm going to walk away. Why fight it? The market clearly is not hot. I went from red, I went to green. Now I'm back to red. Let's walk away. But I got stubborn. I kept trading. I had a little profit, and then a little loss, a little profit, a little loss, a little profit, and then a bigger loss, and another bigger loss, and then a little bit of a recovery, and then another big loss. And I ended up finishing the day down nearly $10,000. If I had walked away right here, I would have been down like $1,200. Who cares? Now, for me, my daily goal is $5,000. So to be down $1,200 in one day, it's negligible. I can make that back in one decent trade easily, but I got stubborn. Now, there was something about that particular day that, I refused to walk away. And this is something you always have to ask yourself. Am I emotionally compromised today? Is there something bothering me today that's going to make me more apt to be emotional? As an example, my biggest red day of my entire career, you want to know what day that occurred on? My birthday. My biggest red day prior to that, you want to know what day that occurred on? The anniversary of the day my father died. Those are big emotional days. On my birthday, I feel like I have something to prove. I want to make sure it's a great day. I got stubborn, just wanted to recover, just wanted to get back to green, and didn't happen. The anniversary of my father passing away, there's a lot of emotion in there. So all of a sudden, I didn't even realize it, but it kind of snuck up on me, and I became emotionally compromised. And the problem with becoming emotionally compromised is it can be a very fine line between being, in control, and then all of a sudden the emotions have taken over and they've dictated your behavior. Because once you cross this point of no return, there's kind of no going back. It's very hard once you've fallen into what we call emotional hijack. You're literally hijacked by these emotions. They are dictating your behavior, and the logical part of your mind that has created this strategy, it's gone. It's totally gone. So guess what happens? Day one, for whatever reason, I don't recall what it was this time, but for whatever reason, I got stubborn. I took an unnecessary loss. I went down $10,000. On day two, I should have known that I'd be coming in on day two already emotionally susceptible because of the previous day's loss. I was still in the shadow of that previous day. I was still in the drawdown of that previous day, right? I just lost 10,000. Well, in that case, it was, 10,000 was about 5% of my yearly profit. I was up 200 grand. I gave back 10,000. So it was already a decent amount. I should have known that I was going to be emotionally activated and to be more careful. And what did I do? I came in on the first trade swinging hard, and I was up on it for a second, and then the bottom fell out and I'm down $20,000. That was my worst day of the entire year. Now, I actually took a bigger loss yesterday, which looks pretty similar, but the story of yesterday is a little different, as you're going to learn in this episode. So that was day two. So now I go from down 10,000 on day one to down 20,000 on day two. And by the end of this 2-day drawdown, I'm down rounding, I was rounding up on those 2 days, but I'm down $28,470.81. And now if we look at the metrics of those red days, what was my accuracy on those 2 days? 46%. My average losers are 4,400. My average winners are 900. I mean, this is the worst example of my strategy. These were the worst days. So on day two, when I came back, I should have known that I was already very quick to be emotionally triggered, and I should have taken steps to put on the guardrails to prevent having a second big red day in a row. And that's what I did differently today. Yesterday was a big red day. Today, I enacted the big loss recovery plan, the BLRP, because I knew that I would have such a tendency to try to find something I could swing big on and get myself back to recovering all of yesterday's loss. That is just human emotion. But I can be better than trading just on my emotion. I can trade with reason and with logic. After all, that is what's made me a millionaire, is following the very detailed steps of my strategy every single day. But when I deviate, that's when these mistakes and these drawdowns occur. So knowing that that's a high likelihood of coming in on day two, you have to put on the guardrails. So let's talk about these tips and tricks to, number one, accept current reality instead of fighting it. Number two, to avoid extended periods of low confidence trading. Number three, to avoid the downward spiral. And number four, to recover quickly. So step one is accepting reality. And acceptance is very hard when you're in the midst of just taking a huge loss, especially when the market is still open. The market's still open, but you're down X amount, and you just think, I don't want to walk away right now. There's still a chance. There's still hope that I could make back some of this loss. And so that hope is going to keep you coming back for trade after trade after trade. But I'm telling you that on a day like that, when you're already at max loss, what's going to happen is you're going to dig the loss deeper and deeper and deeper. And what I actually learned is that when I hit my max loss of minus $5,000, when I go down that much, if I continue trading, I have an 80% chance of doubling the max loss and going down 10,000. So given that I have an 80% chance of doing that, if I'm just at 5,000, that is a very good spot for me to walk away, because I'd rather be down 5 than be down 10. If I'm down 5,000, that's something I can recover from relatively quickly. I start going down 10,000, 15,000, 20,000. Now I'm going to be in a drawdown that's going to take some time to recover from. It may be days, but likely weeks, potentially longer, depending on the state of the current market. So accepting current reality is really important. And I refuse to do that on this day right here, right here, right here, right here. And I finally did it right here, but this was at the very end of the day. This was probably 4 p.m. So I pushed it all the way to the end until I finally had to give up. And it was really just because I was out of time, which is not a good situation to be in. So acceptance is critical. When you're fighting current reality, when you're fighting to accept the situation that you're in, it will lead you to continue engaging in the emotion-seeking behavior of revenge trading, where you're looking for anything to trade to recover those losses. You're upset because you're not happy with the current reality, and you're trying to force a change in current reality. But once you accept the reality of the loss, you can begin to create and follow a plan for recovery. And here's something I'll tell you. When you're in the midst of revenge trading and those emotions are so big and you feel this shame and guilt and you're angry and furious, it feels terrible. Once you've accepted, this is where I am. Now it's about putting together a plan. Think about Apollo 13. Remember that movie with Tom Hanks? Apollo 13. They're up there in the space shuttle, spacecraft, whatever you call it. And when they realized that they were running out of oxygen, they could have been furious. They could have said, I'm going to throw my water bottle. I'm going to break my clipboard. I'm just going to be angry at everything. What's that going to accomplish? Nothing. It's going to accomplish them absolutely nothing. So while it's okay to have a moment of anger, frustration, disappointment, you pretty quickly need to accept, all right, guys, this is our reality. This is our situation. And we got to come up with a game plan. This is a survival plan. And in a way, trading, I mean, look, if you're not able to figure it out, you're not going to be here in the market. So success means being able to take the loss, let it roll off your back, and quickly come up with your recovery plan. And I'm telling you that once you accept the loss and you put the new plan into place, whenever I'm sitting down after having a big loss and I'm like, okay, this is what I'm going to do. These are my steps. I'm going to do number 1, 2, 3, 4, 5. I always feel better because now I have a plan. Now I've got a roadmap. And it totally changes my perspective. So it's like, all right, yeah, I've got a ways to go. It's like, imagine being lost in the woods. You're lost in the woods and you're freaking out. What am I going to do? What am I going to do? And then all of a sudden you say, you know what? Here's my game plan. I'm going to follow this stream, and the stream's going to come out somewhere. Or, you come up with your game plan. And once you start following your game plan, now you have this motivation because every step you're taking is closer to you getting out of this jam. You're not digging the hole deeper anymore. You're now on your path to recovery. So acceptance is the critical first step in the case of experiencing a big loss. Now, I find it really helpful to put loss in perspective. And this is what I did back in March when I had this loss. So I was like, okay, put it in perspective. Yes, it's not fun that you just lost $28,000 in 2 days, but it could always be worse. You could be down $280,000 in 2 days, and you could continue to spiral and have 10 more red days and be down who knows how much. And so putting it in perspective for me usually means finding a way to look at the glass as half full instead of half empty. Because when we experience loss, we're immediately from this perspective of scarcity. We've just lost something. And if you can change that to a perspective of abundance, then I have a lot to be grateful for. That makes it so much easier to cope with the loss. So this is something that I'm going to say is not possible for everyone. And I'm going to tell you what to do if this isn't your situation. So for me, I already was up $200,000 on the year. So that made it easier for me to cope with being down $28,000 off the top. I put it in perspective. Now, as a beginner trader, your track record is the source of confidence. It is your North Star when you're in a slump. You're in the woods, that's your North Star. That's what you follow. Your track record is what you follow to get you out of the slump. So some of you are saying, well, Russ, I don't have a positive track record. I don't even make money. Then I'm going to tell you, I'm going to be real with you. I'm not going to tell you what you want to hear. I'm going to tell you the truth. You should not be trading with real money. You should go back to a simulator. Because if you don't have a track record of profitability in a sim, what are you doing putting real money on the line? You really have no business doing it. Now, I'll tell you, I'll admit, I traded with real money when I got started and I lost money. I didn't even know simulators existed. Of course, this was a very long time ago. And so I feel like maybe I had some excuses, but I wish someone had told me early on, Ross, hold up, use a simulator, prove you can make money consistently in the simulator, and then flip the switch. And so I'm going to tell you right now to do exactly that. If you don't have a positive track record, then you need to go back to the simulator, because the track record is the reminder that when you follow the rules of your strategy, success and consistency follows. So for all of our students at Warrior Trading, I of course give them a trading plan to follow, and we give them access to a simulator to use so they can practice trading the strategies that they're learning, following this plan in a safe environment. And look, not everyone's going to prove success in the simulator. And if you don't, then, well, it sure is good you didn't put real money on the line. But the idea is that you trade in the simulator and you monitor your metrics and you make adjustments. You start to learn things about yourself. Okay, maybe I'm not good at trading this price stock. Maybe I'm not good at trading this time of day. You make those adjustments to your strategy until you get to a point where, wow, if I only do this, 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 and this, I actually make money. Okay, now practice doing that for 3 weeks. You're green for 3 weeks in the simulator. You do another week, 4 weeks. That's awesome. You got a month of profitability in the simulator. That becomes your track record, right? So now when you flip the switch from trading in the sim with 100 shares to trading with real money live 100 shares, you have this as your source of confidence. As long as you do exactly what you're doing here, you follow the rules of trading that type of stock, that time of day, those entries, those exits, everything else, then what we want to see is this translate. Now, again, you want to trade in the sim, 30 days, 60 days, 90 days, however long it takes you to have basically a month of profitability. And then you flip the switch and go live. And you want to do that again with small size and see if you can get 10 days of profitability, 14 days, 30 days of profitability. Doesn't mean you're green every single day, but it means you're consistently green more than you're red. So the track record is also a reminder that success is not the result of emotional hijack. It's not the result of gambling with your account. It's not the result of making impulsive decisions. It's the result of being disciplined. Your metrics are a reminder that if you can reset and go back to that point, following your rules, the profit to recovery, right? It's in the market. It's easily obtainable. And that is a really exciting moment. That for me, I remember having this thought early on in my trading career. I had taken a lot of losses. I had incurred debt to learn how to trade because rather than paying my bills out of the cash I had, I was paying bills on credit cards so I could keep that cash in my trading account. And I remember getting to a point where I was sort of calculating how much I had into this whole thing, how much I'd lost trading, how much was on my credit card. And I was like, wow, these are big numbers. And then I said to myself, you know what, Ross, though, here's the thing. If you can consistently make $200 a day, consistently, $200 a day, it's $1,000 a week. $1,000 a week. That's $52,000 a year. If you could do that consistently, you will make back everything you've put into this. Times, it depends on how long you trade, but you'll make it all back. And the profit to make it all back is right there in the market. As long as you can stay focused on these small steps today. What's your job today? Your job today is to have the discipline to follow your rules and not overstay your welcome. And that's when I became so crazy about being disciplined. I just knew all I had to do was follow the rules. And if I could follow the rules, I was in good shape. Okay, so track record really is everything. And if you don't have it yet, practice in the simulator until you've got one. All right, so now avoiding extended periods of low confidence is really important, and I'll tell you why. A loss of confidence during a drawdown is common. I mean, look, if you lose 25 grand in one trade or however much it is of the drawdown, a loss of confidence is to be expected. And you're not going to be the only one that feels that way. But here's the problem with losing confidence. Confidence and competence are key. It's important to be confident, but there's a lot of people out there that are confident but blissfully ignorant. They don't know what they're doing. And so they're confident, but they're just losing money left and right. Now, that's not a good place to be in. You don't want to be there. You want to be confident and competent. You want to be the person who knows what you're doing. And when you're competent and confident, then the loss of confidence results in missed opportunities. It results in not maximizing on opportunities that present themselves because, you're kind of in this state of being really cautious. You're risking too little. You start hesitating. You start second guessing yourself. And here's what happens. And I've been through all of this where, typically you see this maybe micro pullback and you're jumping in right here. The stock goes from $3 to like $6, goes up 100% in 15 minutes, but you hesitate because I don't want to take another loss. I'm a little nervous. I want to wait for it to prove itself. Then finally it sets up a good pattern up here. You jump in and you overcompensate, buying more at the top because you're frustrated, you hesitated. And then just luck of the draw, it does a jackknife and you end up red. And it's like, man, if I'd been the same old me, I would have been in this right here. I might have added smaller size here, but I would have been green on this trade. And I just managed to turn a 100% gainer, a stock that typically is my go-to, into a loser. And of course, then that creates its own emotions. So hesitating, second guessing yourself, loss in potential profit, because now you've got this opportunity cost where you're perhaps scaled down, rightfully so, because you've made some big mistakes. So now you're not capitalizing 100% on the opportunities presenting themselves. You're not at 100% in terms of mental capacity. You're not at the top of your game. You don't want to go into the Super Bowl when you're not at the top of the game. Now, every day when we come into trade, this is a performance sport. You eat what you catch. You have to perform. And if you're not able to perform, what's going to happen? You're going to take these unnecessary losses, right? So the loss of confidence is a major problem. Trading is really all about competence and confidence. When I see traders out there, and I know some traders out there who make far more than me, I think, my God, how are they feeling confident to buy 200,000 shares of a stock, 300,000 shares, 500,000 shares? How do they do it? It's confidence. That's what it is. They've got confidence. And of course, look, they've got maybe a higher risk tolerance than I do, and that's okay too. But they've got incredible confidence, and it's important to have that. So you've got to do everything possible to keep yourself at 100%. So every day you come in, you're ready to be at the Super Bowl. You're ready to be, trading at your best. So keeping your mental state at 100% when you're always ready to perform is important. That means for me, never losing more in one day than I can recover in one day. Now that's in a perfect world, but a couple times a year, things happen. I take too much risk, I get overconfident, and boom, big loss. Now, if we look at my trades just from this week, and we are going to go over my trades from today, just as an example, I haven't forgotten about that. But if we looked at my trades just from this week, you'll see that this week has been a really good week for me in total. In total, it's been a great week. Yesterday was not a good day. The day before yesterday, I was up $100,000. So I really can't complain, but I have seen traders who have turned a great day like this into a day where they give it all back. I've seen it happen. Traders who trade at my level, I've seen them make $100,000 in one day and lose $150,000 the next day. So for me, I never want to lose more in one day than I can recover in one day. And after a red day, what do I have to do? I have to immediately implement guardrails to reduce the risk of back-to-back red days. So actually, if we look at my trading here over the last 90 days, you will see that I have no back-to-back red days, right? Look at this. Yes, do I have red days? Certainly. I have periodic red days. And then the next day, each day following a red day, I'm being very careful. Now, when I was showing you that 28,000 drawdown from the beginning of the year, that was one of the first big drawdowns I'd had in months. And I don't know what I was thinking. This is actually very common. You'll say, I don't know what I was thinking. That's because your logical brain was gone and it was emotional hijack that was in charge. It was my emotions that were taking the wheel and I was a backseat to all of it. I came back the next day and was like, what have you just done? You're down $28,000. But that was when I had to right away accept what I had done, acceptance, and now implement these guardrails to prevent multi-day spiraling, or prevent it from getting any worse. So acceptance, look, if you've already had 10 red days in a row, you've had 10 red months in a row, the best time to accept would have been 10 months ago when that first started, whatever. The next best time is right now. So you can still accept where you're at right now and commit yourself right now to not digging the hole any deeper. So after a red day, or if it's for you, maybe it's a red month or whatever it is, immediately As soon as you become aware, implement these guardrails to reduce the risk of back-to-back red days. And I'm going to share with you what those guardrails are. Be quick to size down when it gets cold and learn to develop a keen awareness of caution flags in the market. So for me, we have to do everything possible to avoid this back-to-back spiral where the losses get bigger and bigger and bigger. We need to break the cycle. The moment we have the awareness and the insight into our state of mind. Now, this is important because sometimes people don't have insight into their condition, right? When you're in the midst of emotional hijack, you don't always have the insight to know that you're in that state, which is very dangerous because you deceive yourself into thinking you're good, but you are not good, not even close. And so the more you trade, the more experience you gain, the better you'll get at being able to recognize and be honest with yourself about whether or not you're really good or if you've started to get close to that point of no return where you have to step back and walk away. So we have to break this cycle. How do we break this cycle and where do we break it? Number one, stop the bleeding. You've got to stop trading. That's the first thing. I mean, you have to stop the bleeding. Sometimes I think about this as like, if I was in a rowboat and all of a sudden it's leaking, what's your first order of business? Is it paddle as fast as you can to start to recover, to get back to shore? Or is it to fill the hole, fill the crack? Now, look, I mean, if you're really close to shore, maybe you can start paddling like crazy. But realistically, let's say you're way out there. Your first order of business is to stop the leaking. Stop bringing on the water. Stop bleeding. Stop the losses, which means stop trading. Now, the next thing is get help. And I think telling a friend I'm spiraling, or even right in the chat room in our community, be like, guys, I'm having a bad day. I'm revenge trading. I'm spiraling. I'm on emotional hijack is important because you've got a whole support. You got a network here of people who will tell you exactly what to do. Turn off the computer right now, walk away, go outside, take a deep breath, go for a run, leave. Because we've all been through it before, and we don't want to see you make the mistakes that we know happen when you continue to trade when you're spiraling. So we all want you to walk away as quick as possible. So whether you're getting help from someone in the chat room or you're calling a friend or whatever it is, you get help. Number three, assess the damage. And when we're assessing the damage, that's when we get perspective. We ask ourselves, what's our track record? How bad is this really? Can we kind of change our perspective on this so the glass is still half full, even in spite of this loss? And just be honest with how bad is the situation. Now, maybe the situation's really bad. I've seen people take some pretty catastrophic losses and recover from them. And I've seen people take relatively small losses and they get shaken and they can't get recentered and they just spiral out of control, which is kind of remarkable. Maybe if you've tuned into my recaps for a number of years, you've seen me take some pretty big losses. It's happened. Look, I mean, I trade with big money and at times I've taken some big losses, but I've been able to recover. So these are sort of the three steps. Stop the bleeding, get help, and assess the damage. Now, when it comes to stop the bleeding, you've got to stop trading, of course. And one of the things that that's always important to me is to try to, like I said, not lose more in one day than I can make in one day, which means my daily max loss is the same as my daily goal. My daily goal is $5,000. My daily max loss is $5,000. Now, over the last 30 days, if I look to the last 30 days right now, my 30-day average is actually, let's see, last 30 days right now, I've been averaging 21,000 a day. So I've allowed myself to trade with a little bit more risk in these last 30 days and I know that the red days will be bigger, but the green days are bigger as well because I'm in a hot market. So while I have kind of my rough rule of thumb of daily max loss and daily goal, it is relative to the market you're in. If you're in a hotter market, the numbers can be bigger. If you're in a colder market, you got to tighten things up a little bit. But a quick recovery is really important. So how do we position ourselves for a quick recovery? This, by the way, was my peak in, I guess it was like early March. And then that was my drawdown right there. And then this was the recovery. And it took some time to make back all that loss, right? And you'll see, as I was making it back, there were some additional drawdowns. Made it back, another drawdown. Made it back, another drawdown. This is trading. You're going to have losses. You're going to have red days. Net at the end of the month, the year, you want to be making more than you're losing, but drawdowns will happen. So here's what I do. This is my recovery plan, and I would encourage you to implement this in your own trading if you've gone through this type of drawdown. So number one, creating the game plan and breaking the cycle is huge in terms of just you've stopped the bleeding, you've accepted the loss, and now you're sort of repositioning to these are the steps I'm going to take to recover. So number one, sizing down immediately. This is a really tough one for a lot of traders to accept, including myself, because if you size down, suddenly that hope of, all I need to make is $1 a share with 25,000 shares. Well, that's gone because you're not trading with 25,000 shares when you're sizing down. You're trading with whatever is maybe a quarter of your regular size. So if you max at 10K shares, you're trading it with 2,500. And I know that it's not fun. And a lot of traders are resistant to trading with small size, but here's the reason you do it. After you've had a big loss, there's two things that may be happening. Number one, possibly the market's still hot and you just made a mistake. Okay, that could be just totally you. But what's more likely is it's a combination of the market has started to cool off and you weren't quick enough to recognize it, which means you come back for trade 2, trade 3, trade 4. If the market has in fact cooled off, you're probably not going to have big winners. So now it actually does make more sense to size down a little bit. And one of the things that's so frustrating is that for me, most of my hot streaks end with a big loss. So I'll be on a really nice hot streak, doing awesome, and then boom, a big loss. And that big loss kind of marks the end of the hot streak because through this stretch, I may have had trades that were pretty risky and I was pushing my luck on it, but the market was so hot, I just kept making money. It was a more forgiving market, even if you weren't being as disciplined as you could have been. And then it catches up to you and boom, it caught up to me right here. That's the big loss. And then it's like, okay, while it's possible that I could rally back with big size on the next day, that's the upside benefit. The downside would be a second big day in a row, and I cannot handle that risk. So if I can't handle that risk, I can't take big size. So instead, I'm sized down, which means day 2, best case scenario, small green day. Worst case scenario, it's a small red day. But both of those are acceptable. A second red day, as long as it's smaller than the first, is acceptable. Because look, it's going to happen. You're going to have 2 red days in a row. It could be just a bad market. It's bad luck, but it could happen. But at least on day 2, it was with small share size. So the total loss was not as significant, was not as painful. So now you go from down 10,000 to down 11,000 or 12,000. It's negligible. You haven't doubled your loss, right? You made it a little bigger, not too bad. And then coming into, day 3, day 4, you expect over the next 5 days, probably 4 out of them will be green. So now you start making slow progress, right? All right, so the way I approach this is on day 2, guardrails. Number 1, we size down. That's the first thing you've got to do. You've got to size down. Number 2, you focus on A quality stocks. That's going back to the basics of what your metrics tell you do the best. Wherever you make the most money, that's what you're focusing on for day 2. It's just like the setups that you have 99% conviction in. And if there's nothing that you have that conviction in, you don't take trades on day 2 because you don't want to dig the hole deeper. By focusing on A quality setups, what's going to improve? Your accuracy, right? Now, I've got this book here, which I reference all the time. This is Thinking in Bets by Annie Duke, Making Smarter Decisions When You Don't Have All the Facts. That sounds like the type of information we'd like to learn about. It's a national bestseller. She's a professional poker player. And so she's talking about making educated bets, of course, when it comes to poker. And she makes money doing it. So for her, it's not really gambling because she's got an edge. When it comes to trading, one of the things that she said in this book is she mentioned her brother was teaching her how to play poker. And he said, these are the hands that you will play as a beginner. And she said, well, I don't understand. I see other people playing different sets of hands. Why are they allowed to play other sets? And he said, they've been doing this for a long time. They've earned that right. You are guardrails on, bumper rails. You're trading the ones that have the highest probability of working. And that's what you have to do on day 2 after a loss. You've got to trade the setups that have the highest probability of working because you need the wins. You need to restore your confidence, right? You need the win. And so you take those trades, you catch a couple wins, and boom, you're feeling better. And I'll tell you, I've met so many traders who are so resistant to putting themselves into trader rehab. And I did an interview with one of these traders recently. He's doing really well. He's got his 100K badge at Warrior Trading, $100,000 verified profitability. He's putting in his paperwork for a 500K badge. And so he's doing really well. He's having a great year, but he had a big drawdown in earlier part of the year. And I said, you've got to rein it in, because right now you're just digging the hole deeper and deeper and deeper. And he really didn't want to do that. He just wanted to kind of keep pushing through. And like, on the one hand, I get it, because I've totally been there. And sometimes we have to learn these lessons the hard way. We got to learn through our own experience. But on the other hand, I wanted him to like rein it in so he wouldn't give back 30% of his profit on the year before things turn around. Because I don't think it was totally his fault that he was struggling. It was the market. There was a number of other factors, but the emotions were making it worse. Rather than just taking those quick little, small little base hits, you start getting in this mentality: if I need to make X amount today, and I need 10 days making that amount to get back to whole, and you're doing that math, you're thinking about all that, and next thing you know, the hole is getting deeper and deeper and deeper. So you focus on A quality setups, accuracy improves, confidence improves, profits will follow, right? Profits are a byproduct of you following your strategy every single day. It's a byproduct. If you focus on the profit, you focus on the number, you're pointing yourself in the wrong direction. That's not your North Star. Your North Star is focusing on process. Now, I will actually put a link for you guys. I'll put it in the description of this episode. It's a link where you can download my trading plan. So if you want to download my trading plan and you want to start implementing it in your own trading today in a simulator, please, by all means, check that out. I'll put that link in the top of the description. And I'll have another one that I'll add, another PDF that I'll add to that download, so you could download a couple PDFs. So you follow the plan, profits are a byproduct of that plan, and consistency and confidence return. The most important thing here is to avoid having a second or third loss when you're in this vulnerable position. This is where you've got to be on the defense. And I know it's not fun to be on the defense. It's not fun to batten down the hatches, but this is what you have to do. So sometimes I think about, I don't know, maybe like a landscaper or something. They're down in Florida, they're mowing lawns, all this stuff. And all of a sudden a hurricane is coming through. And they want to be working. They want to be making money. They got their crew to pay, right? They've got the equipment. They've got lease payments, all this stuff. But there's a big hurricane. What are you going to do? You're going to go out and mow the lawn in the hurricane like an idiot? Come on. You batten down the hatches. You hunker down. You weather it out. You weather through the storm. And are you kind of taking losses by doing that in a way as a lawnmower landscaper? I guess so, but at the end of the day, it's the right decision. So being a trader, it's being self-employed. You got to roll with the flow. You got to go with the flow. You got to roll with the punches, because that's the way it is. You've got ups and you've got downs. And when you're in a down, you can't force it. You can't muscle your way back to the top. You only get back to the top following the rules. So now the question is, when do I size back up? I size back up once I've recovered half of my drawdown. And I'm telling you, again, I've known so many traders who are so reluctant to go into trader rehab. And if you're reluctant to check yourself into trader rehab, I'm telling you, most likely it's the fear of missing out that is creating that resistance. You're saying, I don't want to miss out. What if tomorrow there's a big move and I miss it? And I get that, I hear that, but what you don't want to have happen is to have 5 more red days in a row. And what I am telling you is, if you put yourself into trader rehab, if you accept current reality and you start today following this plan, which you can download, which is pinned to the top of the comments and in the description, you start following that plan, 5 days from now, you're going to feel like a different person. 5 days from now, you're going to feel like, wow, I've got clarity. I've got confidence. Once you separate yourself from all the emotions of the drawdown and you start having even just a little incremental progress, that's when you feel like, wow, it doesn't matter that I'm technically still down $75,000. I'm making $200 a day. And if I can make $200 a day for the rest of this year, for the rest of next year, for the rest of the year after, it's smooth sailing for me. And I'm good. And that's what I kept telling myself. All the profit to recover my losses is in the market, but there's a hitch. It'll only come if I have the discipline to follow the rules of my strategy. Can you bring the discipline? I'm sharing my strategy with you, but you got to bring the discipline. All right. Now, I'll also put a link in this episode for my free day trading course. I have a free course that I teach. It's about 90 minutes long, and it really goes into the specifics of stock selection, the type of stocks I trade. And I'll also share with you the link where you could do a 2-week trial at Warrior Trading if you want to watch over my shoulder while I'm trading. So this is the way I approach it. I have a nice hot streak. I go into a drawdown. And here, this is the spot we really get focused. Guardrails are on. So that means max size is 1/4 of full size. Max size is 1/4 full size. Focusing on base hits. Focusing on building cushion. So building cushion means each day when I'm trading, I'm starting with small size. I'm trying to make 20 cents a share with small size, build a little bit of a cushion. And then once I have the cushion, I'll size up a little bit more up to my quarter size max position. I have to be very careful because it's important that I build some consistency. I put together some green days, so I can't take a lot of risk. So I start putting together a couple green days, maybe a little red day, another green day, another small red day, another green day. And once I've had usually about 5 days, between me and the loss, by that point, usually I've made back a little bit of the loss and I'm feeling emotionally 1,000 times better. Once I'm truly feeling emotionally better and I've made back close to half of the loss, then I start to size back up for the next leg higher. And that's when I move into this next range. And you know what? It's only inevitable that in a matter of time, boom, I'm going to have another red day like I just had yesterday. It's going to happen. I'll have another red day. It's disappointing, but it'll happen. Now, in order to make a smooth recovery, stock selection is number one. You have to be super dialed in on the best type of stocks to trade. So, if you're not familiar with my criteria for stock selection, I have 5 very specific pillars of stock selection. And let me see if I can grab, I think I have here it is. So these are the 5 pillars of stock selection. All right. Number 1 is looking for stocks for me that have 5 times higher volume today than is average. This means the stock is doing something exceptional, higher volume than average. Why? Typically because there's news. Stock already has to be up 10% and it should be priced ideally between 2 and 20 or 3 and 20 and a float of less than 5 million shares. Now, this was a slightly modified 5 pillars for the current market that we're in. Typically, I would say float of less than 20 million and price between 2 and 20. So this is just slightly zoomed in to what was working better in just the last few weeks. But generally speaking, every trade I'm going to take when I'm in my recovery has to be trades that meet a quality setup. So let's talk about the positive feedback loop. Positive feedback loop begins with trading high quality stocks. You trade the right stocks, even if it's not a perfect setup. More important than the setup is the stock. Now, I'll tell you something. Early in my trading career, I tried to create this scanner to search for bull flags because I love bull flags. And so I thought, what does a bull flag look like? A candle that squeezes up here, maybe 2 or 3 candles. So the stock over the last 10 minutes should be up X%. So I was like, up, 10%, 15% minimum in 15 minutes. And then I was like, and it has to be, hanging out here at the top of the range. Because what I wanted to find was this pattern right here. And I'd be buying right here, first candle to make a new high. So I was looking for a stock that was sort of like right here, which meant it was up, 15% in the last 10 minutes. It had, one red candle, and it was above its 9 EMA. So I was like creating all of these technical characteristics, and the scanner started giving me bull flags. And I was like, nice, awesome. And I started trading them and I started losing money. What is going on? And I realized more important than the pattern is the stock. When you trade a perfect pattern, but it's not a stock that nobody cares about, it's not going to work. You trade a perfect pattern on Tesla, high frequency trading algorithms will take your money. Thank you very much. Money's gone. You got to trade the right stocks. So stock selection is number 1. Understanding the 5 pillars of stock selection, how they vary from market to market is critical. So by focusing on high quality stocks, what happens? Accuracy improves. Accuracy improves, profit loss ratio follows. Why is that? Because more winning trades means you're avoiding what used to be losers. And some of those losses likely used to be big because you weren't trading good quality setups. Is it possible you could take a big loss on an A quality setup? It certainly is, but it doesn't happen nearly as often as taking big losses when you're trading low quality stocks. So accuracy improves, profit loss ratio improves. What does that improve? Your consistency, more green days, more green weeks. Now, consistency is your track record. That creates self-confidence. Increased confidence means increasing the number of trades, increasing the share size, and making more money. That is the positive feedback loop that I want to see you get on. That's the positive feedback loop that I'm on in total in general. But even I get knocked off it from time to time, as I did yesterday. So now let's talk about today, my recovery. All right, so yesterday, big red day, as we already looked at. We had the P&L here. So yesterday was down $11,000, was not pleased with that, not a fun day. Today, I am up $4,632.28. This is a good recovery day. I'm green on 4 out of the 5 stocks I traded. I never went red today. I started by building a cushion. So what does that look like? I sat down today and I said, first goal is being up $1,000 on the day, focusing on A quality setups. If I can get myself up 1,000, I'm comfortable taking a little bit more risk and seeing if I can hit my daily goal of $5,000. I came very close to it. Not quite, but very close. So the first stock I traded today, AREN. I'm up $1,830 on it, as you can see right here. Let's look at AREN. Why did I trade this stock? AREN is up right now 178%. This morning, it hit a high of 250%. Wow, that is an incredible move. Where was I trading it? Take a guess. Right in here. Look at this pop. The pop, the pullback, and the squeeze up to 240. That was a nice pattern on high volume on a stock that was obvious because in that moment, it was our number one leading percentage gainer in the entire market. It was 100% obvious. The next stock I traded, SPPL. SPPL went up over 100% today. Let's see, let me type this in here. It's currently up 39%. It's pulled back a little bit off the highs. And I'm telling you, this is also a really good example where today, did we have strength? Yes, but it wasn't as hot. Yesterday started to cool off. Today was also a little cooler. A lot of the stocks moving today were sympathy to the move, the 260% move on AREN. They were lower price stocks. So SPPL, I got a couple nice trades on this. And my trades on this were pre-market. I bought it in this area right here, not really using the 5-minute chart as much as the 1 minute. So I'll pull up the 1 minute for you. So SPPL trading the 1 minute chart, the stock had news, pops up, drops down, pops up, drops down. My best trade on it was right here, was right in here for the squeeze through the high of day. That was my best trade on SPPL. Had a couple trades in this area with smaller size. It was going above and below VWAP, which is the technical indicator. Didn't love it. But was able to get in the zone where I was like, okay, I think it's going to work. Float, 4.8 million shares, super high relative volume. Relative volume ratio today on this one is 5.3. Relative volume ratio on AREN is 11,000. Holy smokes. And then we had a couple other stocks I traded, TCBP, MULN, ASST. So today was a day where I came in looking for base hits and I locked up base hits. Would I have loved to have made back everything I lost yesterday? Sure, that would have been nice. If the market had given me those opportunities, it's possible it could have happened. But I had to accept that that's not the goal for today. The goal for today was to focus on A, quality setups, building my cushion, and taking base hits. That was what was critical, and I achieved that. So for you, if you've gone through an extended drawdown, your number one focus right now has to be stop the bleeding and put yourself into a trading plan where you can begin your recovery. Slow and steady. It's not going to happen overnight, but if you could start focusing on hitting base hits, locking up, small green days, 5 days from now, 10 days from now, you're going to feel like a different person. You're going to be like, you're gonna have so much confidence. You're gonna feel like you've got your mojo back. You're just gonna feel so much better. And that's why I just think it's so important to put yourself into that trader rehab program, because the downside of not doing it is, well, what if there's a big move and I miss it? Okay, that would be disappointing. You're in trader rehab, you missed the move. But the upside benefit, that's your only downside. Your upside is that you will be able to reset emotionally and get back to trading from a place of confidence and consistency. And that is worth so much more than one trade that you might miss. So you miss one trade, who cares? There's always going to be another trade around the corner. So one of the things I always tell you guys is, look, the market's going to be here for you. This is your time right now to build your experience and your own sense of educated intuition so you can get better at learning when to ease on the throttle, when to get aggressive, and when to cool off. If you found this episode interesting, I hope you hit the thumbs up. I hope you subscribe to the channel, and I hope you check out either my free class or you check out the 2-week trial. I think you will love either of them. And if you want to download my trading plan, that link is pinned at the top of the comments and in the description as well. Thanks again for tuning in. And I'll remind you, as always, trading is risky. My results aren't typical, so please take it slow. Manage your risk. The market will be here for you. I'll see you for the next episode real soon.